Finance is a broad field that touches every aspect of our lives, whether we realize it or not. Understanding finance doesn't just mean having more knowledge about numbers, it's about equipping yourself with the tools to make better decisions, grow your money, and achieve your goals. Let's start with the basics and break down what finance really means. In its simplest form, finance is the management of money. It involves activities such as investing, borrowing, lending, budgeting, and saving. The goal of managing finances is to ensure that money is used in a way that maximizes its value. When we talk about finance, we're usually referring to three main categories: personal finance, corporate finance, and public finance. Personal finance is the area that affects each of us directly. It involves managing your own or your family's money, including budgeting, saving, investing, and planning for the future. Corporate finance, on the other hand, deals with how companies manage their funds, while public finance refers to how governments handle money through taxes, spending, and borrowing. Personal finance is a crucial part of managing money on an individual level, and understanding its basics is essential for everyone. This involves making a budget, tracking expenses, and understanding your income and spending habits. The foundation of personal finance is built on creating a budget, which is essentially a plan for how you're going to spend and save money. A budget allows you to know where your money is going, helping you avoid unnecessary expenses and stay on track with your financial goals. Another key part of personal finance is saving. Building a habit of saving money can make a huge difference over time, even if you start small. Saving is not just about setting aside extra money when you have it, it's about making it a priority. An emergency fund is an important type of savings that serves as a safety net. It's money you set aside to cover unexpected expenses like medical bills or car repairs, and having this cushion can keep you from going into debt when surprises happen. A general rule of thumb is to aim for 3 to 6 months' worth of living expenses in your emergency fund. Investing is another crucial component of finance that many people find intimidating, but it's essential for building wealth. Unlike saving, where your money remains idle in a bank account, investing allows your money to grow over time. There are different types of investments, such as stocks, bonds, real estate, and mutual funds, each with its own risk and return. Stocks, for instance, represent a share in a company, and when you buy stocks, you're buying a piece of that company. While stocks can offer high returns, they also come with higher risk. Bonds, on the other hand, are loans that you give to a company or government, which will pay you back with interest over time. Bonds are generally considered safer than stocks but usually offer lower returns. Mutual funds pool money from multiple investors to buy a diversified mix of stocks, bonds, or other securities, allowing you to invest without having to pick individual stocks or bonds. Diversification is a key concept in investing, which means spreading your money across different types of assets to reduce risk. Instead of putting all your money in one place, you spread it out to minimize the impact of any single investment going bad. Debt is another big topic in personal finance, and while it can sometimes be necessary, it's something that needs careful management. Debt is money that you owe, and it can come in many forms, such as credit card debt, student loans, and mortgages. While some types of debt, like a mortgage, can be considered good debt because it helps you acquire assets like a home, other types, like high-interest credit card debt, can be very damaging. When taking on debt, it's important to consider factors like the interest rate, loan term, and your ability to make timely payments. High-interest debt can quickly spiral out of control, as the interest compounds over time, making it harder to pay off. Paying down high-interest debt should be a priority in your financial plan, as it can help you save money in the long run. Let's now look at the concept of credit, which is closely related to debt. Credit is essentially a measure of how trustworthy you are with borrowed money. A credit score is a numerical rating that represents your creditworthiness, and it's based on factors like your payment history, the amount of debt you owe, and the length of your credit history. A good credit score can open doors to better loan terms, lower interest rates, and even job opportunities in some cases. Maintaining a good credit score involves paying bills on time, keeping your debt levels low, and being cautious about taking on new credit. If you're just starting out, one way to build credit is by getting a credit card and using it responsibly. Pay off the balance in full each month to avoid interest charges, and keep your credit utilization rate, the percentage of available credit you're using, low. This shows lenders that you can manage credit well and are a low-risk borrower. Now, let's talk about one of the most exciting aspects of personal finance: building wealth. Building wealth isn't just about earning more money, it's about making your money work for you. One way to build wealth is through compound interest, which is when you earn interest not only on your initial investment but also on the interest that accumulates over time. Compound interest can significantly grow your wealth if you start investing early. Another important concept in wealth building is the idea of assets and liabilities. Assets are things that put money in your pocket, like investments, real estate, and businesses, while liabilities are things that take money out, like loans and other debts. The key to building wealth is to acquire more assets than liabilities. Taxes are an unavoidable part of personal finance, but understanding how they work can help you keep more of your hard-earned money. Taxes are collected by the government and used to fund services like roads, schools, and healthcare. There are different types of taxes, such as income tax, sales tax, and property tax. Income tax is a percentage of your income that you pay to the government, and it varies depending on your income level. Learning about tax deductions and credits can help reduce your tax bill. For example, if you're saving for retirement through accounts like a 401k or an IRA, you may be eligible for tax advantages. Some people also benefit from hiring a tax professional or using tax software to make sure they're not overpaying. Finally, planning for the future is an essential part of personal finance. Retirement may seem far off, but the sooner you start planning, the more secure you'll be when the time comes. Retirement accounts like 401k and IRAs are designed to help you save for retirement, and they often come with tax benefits. Many employers offer matching contributions to a 401k, which is essentially free money for your retirement. Social Security is another source of retirement income, but it's not enough to fully support most people, so it's wise to have other sources of income as well. Another aspect of planning for the future is having insurance, which provides financial protection against unexpected events. Health insurance, life insurance, and property insurance can help protect you and your loved ones from financial hardship. Life insurance, for instance, ensures that your family is financially protected in case something happens to you, while health insurance can cover medical expenses. Estate planning is another part of financial planning, especially as you accumulate assets. Estate planning involves deciding how your assets will be distributed after your death. Creating a will, assigning beneficiaries, and setting up trusts are some of the steps involved in estate planning. This ensures that your loved ones are taken care of and that your assets are distributed according to your wishes. Even if you don't have significant assets now, it's a good idea to consider estate planning as your financial situation grows. In summary, understanding finance is about knowing how to manage your money effectively, make informed decisions, and plan for the future. By learning about budgeting, saving, investing, managing debt, building wealth, and planning for retirement, you're taking steps toward financial independence and security. Finance may seem complicated at first, but with time and dedication, anyone can master the basics and take control of their financial future. Whether you're just starting out or looking to improve your financial situation, the key is to keep learning, stay disciplined, and be patient. Financial success doesn't happen overnight, but with the right knowledge and habits, you can build a secure and prosperous future for yourself and your loved ones.